Bitcoin has experienced a strong rebound this week, recovering from its recent downturn. On Wednesday, the world's largest cryptocurrency surged to a high of $83,500, marking a 7% increase from its 7-month low of approximately $76,000 recorded earlier on Monday. The rally comes in response to the latest consumer price index data from the United States, which indicated lower than expected inflation figures. This development has fueled optimism across global financial markets, including equities and digital assets. Despite Bitcoin's price recovery, institutional investors continue to show caution. The Bitcoin exchange-traded funds market recorded another significant outflow of $371 million on Tuesday. Since the beginning of March, total outflows have now surpassed $1.5 billion, highlighting ongoing uncertainty among corporate investors. While the cooling inflation data has sparked renewed interest in Bitcoin, the continued ETF sell-offs raise questions about the sustainability of the recovery. Analysts suggest that if large-scale outflows persist, Bitcoin's momentum may lag behind altcoins in the short term, leaving alternative cryptocurrencies to capture a larger share of the recent market inflows. The latest US CPI report has reinvigorated investor sentiment, propelling the global cryptocurrency market capitalization upward by 1.6%. Adding approximately $40 billion in value. A closer analysis of market trends reveals that altcoins have benefited the most from this renewed demand, while Bitcoin's recovery remains constrained below the $85,000 mark. Among the biggest gainers, Pi Network has emerged as the standout performer, recording a remarkable 22% surge at the time of writing. The rally is largely attributed to heightened community engagement ahead of Pi Network's pivotal migration event set for March 17th. Additionally, increasing media coverage regarding Pi Network's potential listing on CoinMarketCap and CoinGecko has contributed to the growing bullish sentiment surrounding the token. Hedera also experienced a significant rally, posting a 6% gain and briefly surpassing the crucial 20-cent resistance level. This surge follows an announcement from the US Securities and Exchange Commission, which recently acknowledged Nasdaq's filing to list Grayscale Spot HBAR ETF. The development has significantly bolstered investor confidence, fueling a sharp rise in demand within just 24 hours of the news. Binance Coin climbed by 2%, stabilizing around the $560 mark. The uptick in BNB's price is largely driven by growing interest in exchange tokens, as traders continue to execute high-volume recovery trades in response to improving macroeconomic conditions. Analysts suggest that if demand for exchange-based assets remains strong, BNB could sustain its upward trajectory in the coming weeks. While the broader cryptocurrency market has yet to post a full-scale recovery, key indicators suggest a growing appetite for risk among traders. Notably, the stablecoin sector has expanded by 0.6%, adding $117 million in new capital within the past 24 hours, according to data from CoinGecko. Historically, stablecoin inflows during market rebounds signal fresh liquidity entering the ecosystem, providing a firmer foundation for continued market growth. Memecoins, often regarded as a barometer of speculative enthusiasm, have also witnessed substantial inflows. The aggregate market capitalization of top meme coins has surged by 7.4%, approaching the $50 billion mark. A closer examination of market movements reveals that all three of the top-ranked memecoins have outperformed Bitcoin over the past 24 hours. Dogecoin posted a modest 1.4% gain, while Ethereum-based Pepe and Shiba Inu surged 6.3% and 1.7% respectively. Historically, when meme coins outperform the broader market, it often signals a period of heightened risk appetite among investors. With $117 million in stablecoin inflows, $370 million funneled into memecoins and cooling US inflation data bolstering market optimism, indicators point to a recovery phase that could be sustained in the near term. US House of Representatives votes to repeal IRS crypto tax rule. In a significant policy shift, the US House of Representatives has voted to repeal an IRS rule that required decentralized finance brokers to report user transactions in a manner similar to traditional securities brokers. The regulation, introduced under the Biden administration, was designed to enhance tax compliance, but faced criticism from lawmakers and industry experts who argued that it could stifle and drive crypto firms offshore. The bipartisan repeal effort, spearheaded by Representative Mike Carey and Senator Ted Cruz, successfully passed the House following earlier approval in the Senate. Supporters of the repeal believe that rolling back the tax reporting requirement will help create a more favorable regulatory environment for the cryptocurrency industry. The bill now moves to President Donald Trump's desk for final approval. In a major institutional development, financial services firm Cantor Fitzgerald has entered into a strategic partnership with Anchorage Digital and Copper to manage collateral and custody for its newly launched global Bitcoin financing initiative. The initiative aims to provide leverage to institutional investors holding Bitcoin while ensuring high security and regulatory compliance. Anchorage Digital, the only federally chartered crypto bank in the United States, will oversee custody and compliance, while Copper will handle digital asset services, including collateral management. The partnership launches with an initial $2 billion in financing, with plans to scale further as demand for Bitcoin-backed loans continues to grow among institutional investors. Russia's central bank explores regulated crypto purchases for qualified investors. Russia's central bank has announced plans to introduce a new regulatory framework that would permit a select group of qualified investors to purchase cryptocurrencies under an experimental legal regime. The initiative, developed under the guidance of President Vladimir Putin, aims to introduce controlled crypto investments while maintaining strict restrictions on the use of digital assets as a means of payment between Russian residents. According to a press release issued on Wednesday, the proposed framework will run for a 3-year trial period, allowing authorities to assess risks and develop appropriate regulations. Eligible participants include individual investors with securities and deposits exceeding 100 million rubles, those earning an annual income above 50 million rubles, as well as corporate qualified investors and financial institutions. To enhance market transparency and mitigate potential risks, Russia's central bank also plans to introduce specific regulatory requirements for financial entities engaging in crypto investments.